And joining me now is Laura Ulrich. She's the Director of Economic Research at Indeed. Laura, welcome to NYSE Live.
Good morning. Thanks for having me.
Of course. So what are your biggest takeaways from today's private payrolls data?
Yeah, the number is always good news when it's higher than expected, right? I will point out, though, last month it was lower than expected, and then we saw a higher than expected payroll jobs reports. We still don't necessarily know what this means for Friday. But one thing I will point out is that, again, in the ADP report that came out this morning, most of the growth was seen in the healthcare space. So that's something we've continued to see both in their data and in the payroll employment data.
Why do you think we're seeing growth in that space particularly?
Yeah, I think some of it is expected, right? Because we know baby boomers are aging. We've known this demographic shift was coming for many, many years. And so it makes sense that as we have a growing population of elderly in the United States, that we're also going to need more health care. I also think, though, the growth in wealth over the past few years from the growth in asset values is also playing a role here. Those baby boomers are wealthy on average. And so not only are they consuming the healthcare we would have expected them to consume, they're also consuming things, extra things like full body scans and enhanced dental care and things like that. So we've seen quite a boom in healthcare employment.
All right. And on Friday, the Bureau of Labor Statistics will release the February jobs report. What do you anticipate we're going to see?
Well, I am anticipating for us to see kind of a mediocre report, although last time I was expecting that and it was a little higher than I expected. So I'm looking forward to Friday, but I think we'll continue to see strength in the healthcare and social assistance sector. And then I think we'll continue to see a bit of weakness in professional business services, financial activities, some of the spaces that have been quite weak over the last year or so.
All right, we understand that your data is showing a slowing wage growth. Can you speak into this a little bit?
Yeah, absolutely. So when we do have a more stagnant labor market, this makes sense that employers don't really have to pay people a whole lot more to entice them to either come to work there or to remain in their jobs. People are job hugging, right? They're hanging on to the job that they have right now. Quits rates are very low. So we do expect to see in those cases for wage growth to fall, and that is what we've been seeing.
And what are companies doing specifically to entice potential employees as a result? Are there any extra benefits they're offering?
Yeah, absolutely. So we are still seeing that signing bonuses are elevated compared to what they were in 2019. So while signing bonuses have been coming down a bit, the percentage of companies offering signing bonuses, it's come down at a much slower rate than wage growth. And this also, maybe shows us that companies are still offering bonuses to recruit workers, but that allows them to provide those workers without money that then doesn't translate into ongoing wage increases. So it's a good option for some companies. And we're also seeing that in the healthcare space, which does remain very competitive, has a limited labor supply, those signing bonus rates are well elevated, well above levels we see in other sectors.
All right. And what do companies offering signing bonuses signal about the job market?
Well, typically you see companies offer signing bonuses in a market where it's difficult to recruit talent. And so if we look in our data, we see that signing bonuses are most often offered to physicians and surgeons, nurses, also medical technicians, therapists, dental employees. And so that is a market where labor supply, you have to be registered, right, licensed to have those jobs, have a certain level of education. And so it's hard still for companies to attract that talent. But as I mentioned, it also can be a sign that companies want to give some upfront money to recruit talent, but don't want that to translate into like a permanent salary, right? So it's a way for them to give a one-time bonus that doesn't represent an ongoing expense for the company.
All right. Thank you, Laura Ulrich, Director of Economic Research at Indeed, for joining us.